Listen up closely. I hope you know that they're just going to keep telling you that the housing market is never going to go down, that the numbers are just going up and up and up and up. And if you are on the sidelines and you haven't bought a home yet, or if you're waiting to buy your next one, that you're going to be completely left behind forever. But listen closely. Numbers can always be manipulated. So when people and the naysayers ask, where is this housing crash or when will it start? They're able to point to numbers that show that home prices are still rising. Well, let me prove to you today that real home prices are actually not rising. Not my opinion, just actually what the data shows. Now, the mainstream media is never going to cover the topics I cover here when it comes to real estate, the stock market, or other economic news. So if you appreciate not being lied to or being given a specific agenda for political purposes, you should subscribe right now so you don't miss out on any of the important videos I drop almost daily when it comes to what could affect you and your family the most. Now, back to where most people are getting it wrong. Yes, it appears that home prices are still increasing, but like I stated in a previous video, you need to understand the relation to how much home prices are rising compared to inflation to really understand if they are and make a conclusion for yourself. Like I said in the last video, if I gave you a 5% raise on your job, but inflation went up 10%, did you gain money? Would you be okay with your boss telling you, hey, you're making so much more money this year than you were last year because I gave you that 5% raise? And of course, for most people who understand, or even if you don't understand, if you're just an average American and you have to buy things, which we all do, it would be a huge resounding no. I have no idea why they continue to insult the intelligence of the American people, but let's cover what the Redfin CEO and the National Association of Realtors have to say in 2 articles before I give you the real data on whether housing prices are actually going up or not. Both articles that we're going to cover today are coming from Business Insider or Markets Insider or whatever they want to call themselves, right? They have different names on the website. But anyways, the housing market keeps getting more expensive is the name of the article written by Phil Rosen. It reads, the S&P CoreLogic Case-Shiller National Home Price Index gained 1% compared to a year ago in July. Compared to the prior month, the index moved 0.6% higher on a seasonally adjusted basis. The increase in prices that began in January has now erased the earlier decline. So now they're saying that, because of the way that home prices have risen over the last, September. So over the last 8 months, 9 months, that it's erased the fact that home prices are going down or have went down. Also continuing, the housing market just keeps getting more expensive for Americans. Definitely seems that way. S&P CoreLogic Case-Shiller indices data out Tuesday showed that home prices increased 1% compared to July a year ago. The index, which covers all 9 U.S. Census divisions and measures repeat sales data, increased a little bit over 0.5% in July on a seasonally adjusted basis. U.S. home prices continued to rally in July 2023, according to Craig J. Lazzara, managing director at S&P DJI. We have previously noted that home prices peaked in June 2022 and fell through January of 2023, declining by 5% in those 7 months. The increase in prices that began in January has now erased that earlier decline. We did a video in January of 2023 showing that here in Metro Atlanta, the market that I serve, that home prices, at least the median home price, had fell over 10%. It had dropped from $395 all the way down to $350,000, which is almost a $50,000 drop from where they were in the peak of 2022. Now, I stand on what I said last year. I stand on that even to this day, that home prices peaked in June of 2022, and they have not continued to go up. But let's get back into the article. Mortgage rates well above 7% have weighed on homebuyer affordability, which we all know, and home prices haven't fallen as they typically do when interest rates climb. Remember, they're saying that they haven't fallen. At the same time, a persistent home inventory shortage has also kept the market and prices tight, which is also creeping up. Because if you look at the data again, the amount of homes that are selling is much lower than the amount of new homes that are coming to the market. And I don't know where you live, but I'm sure that you're seeing that they're building new construction everywhere. It seems like they just can't get enough of building new houses, cutting down the trees. And, you see those white sticks popping up, notating that there are going to be new lots right there. Comment below, are you seeing that in your local area? Because literally around the house that I live in now, there's like 5 neighborhoods. There's a D.R. Horton, 2 Dan Ryan neighborhoods, and then there's just 2 that just sprang up. We don't know what builder will be there, but once again, they're building like crazy, especially here in Metro Atlanta. But tell me, is that the same case for where you're at? At 4.5%, Chicago saw the steepest annual price growth out of the cities measuring in the data. Cleveland came in second with a 4% increase, whereas Las Vegas home prices declined 7.2% compared to the year before. So if you bought a house in Las Vegas in the last year, you're severely underwater. I mean, like, it's not like you lost half of your value, but home prices fell 7%, you can't sell it. Moving on, this recovery in home prices is broadly based, Lazara said. As was the case last month, 10 of the 20 cities in our sample have reached all-time high levels. Really, is that true? In July, prices rose in all 20 cities after seasonal adjustment. Year to date, the national composite has climbed 5.5%, or nearly 5.5%, which is above the median full calendar year seen in more than 3 decades of data. Meanwhile, separate new home sales data released by the Census Bureau Tuesday showed that home sales for new single-family houses in August were at a seasonally adjusted annual rate of $675,000. That's 8.7% below the revised July reading of $739,000, yet 5% above the August 22 estimate of $638,000. The National Association of Realtors reported that the median existing home sales price climbed 3% or 4% last month compared to August 2022 to $407,000. They said that home prices went up over 5% for the national composite. Keep that number in mind, 5%. Let's jump into the next article. So the first article said that home prices kept rising. The second article is saying that the housing market has hit rock bottom and the sales slump will last a long time, according to the Redfin CEO. The housing market can't get much worse from here. They're saying that the housing market can't get much worse from here. Interesting. High mortgage rates and high prices have crushed affordability for buyers. So if affordability has been crushed, why are they saying that it can't get worse? Does that mean that they're thinking that affordability is going to get better? Well, how would that happen? Comment below. Let me know. If you're in the market to buy a home, what will have to happen for home or housing affordability to get better? Because we know that rates probably aren't going to go down soon unless something catastrophic happens. We covered that in the last video. So for homes to hit rock bottom or the housing market to hit rock bottom, he must be alluding to the fact that home prices are going to come down. Because if affordability doesn't get much better, we aren't at rock bottom. Because eventually people will start trying to sell these houses. And if sales are slower and homes are unaffordable, who are they going to sell them to? Back to the article. The market is in a freeze and the sales slowdown will last for a long time. Supply and demand, people. The only good thing right now about the housing market is that it can't get much worse. That's the fault of high mortgage rates, which has raised the cost of borrowing for prospective buyers while also discouraging potential sellers from listing their homes. That's exacerbated the supply shortage and pushed up home prices even as demand falls further. The median sales price for a single-family home inched back closer to its all-time high last month, clocking in at $420 in August. Meanwhile, mortgage rates have stayed stubbornly above 7%. It's a slow building disaster. He's saying that it's a slow building disaster, yet he's saying that it can't get much worse. You got to pick a side here, man. I guess he wants to keep the shareholders impressed with what he's saying. But if you're saying it's a slow building disaster, what do you think happens next? Existing home sales have plunged to a seasonally adjusted rate of around 4 million per year, down from around 6.6 million a year in late 2020, which is easily over a third less. So over a 33% drop in the amount of home sales. And he feels like it's rock bottom, even though he says it's a slow building disaster. Interesting. This differs from previous housing slowdowns where homeowners have been forced to sell their properties due to foreclosure risk. Keep in mind that they're saying that the reason why the housing market isn't going to crash or isn't going to change is because homeowners haven't been forced to sell their homes. Just remember that. The only people who are moving are the ones who absolutely have to, Kelman added. I wouldn't call it a Goldilocks scenario. I would call that rock bottom because that's where we are right now. And the only relief is that it can't go much lower. The sales slowdown is bound to last a long, long time, Kelman warned. As experts say, affordability won't improve until mortgage rates dial back. But that's unlikely to happen over the next year, with central bankers keeping a hawkish eye on inflation. Keep in mind, inflation. We'll talk about that next. Fed officials raised interest rates aggressively over the last 18 months, which we all know, to tame high prices, which allegedly that hasn't done, a move that's helped push mortgage rates up to 2-decade highs. Markets are pricing in a 44% chance that interest rates will stay higher than 5% by the end of 2024. Redfin expects the 30-year mortgage rates to ease to around 6% by the end of 2023. Now, as you can see, the sentiment or storyline is that things can't get much worse, and home prices are remaining steady even with record low affordability and decades high interest rates. The truth is actually in the data and understanding the relationship between home price gain and inflation. To do that, let's take a look at inflation data from Shadow Stats. Now, I'm sure you've heard of the CPI, the Consumer Price Index. That's what they're letting people know in terms of how they've been taming inflation. But would you believe, or would you just imagine, that CPI has actually been manipulated? The way that they calculate it today is actually a lot more convenient for them to sell the narrative to you that prices aren't really going up. Looking at Shadow Stacks here, we can see that Consumer Price Index has been reconfigured since the early 1980s so as to understate inflation versus common experience. So they're telling you that inflation is 3%, but your common experience is a lot higher. Back to Shadow Stats, CPI no longer measures the cost of maintaining a constant standard of living. CPI no longer measures full inflation for out-of-pocket expenditures. They're no longer measuring what it takes for you to keep up, essentially, and they're no longer measuring what your out-of-pocket expenses are when they're giving the actual CPI numbers to you and telling you that inflation is only 3% or 4% now because of the rate increases. Now, let's take a look at the way that they used to calculate 1990s inflation, which honestly, I believe that things used to be made better back in the day, if you will. And I think that these numbers are actually a lot more accurate compared to what we're seeing today. And if we look at the inflation data from the 1990s, or the way that they used to calculate CPI in the 1990s, that puts our inflation rate at near 8% compared to what they're telling us at it being near 4%, which is actually double. So like I said before, they're pushing a narrative that inflation is lower than the amount of home price gain, which the real numbers would show in that case that home prices are continually rising. My position is that if you look at inflation the way that I believe it should be calculated, or just go back to the original way, what is it costing you and what does it cost you to keep up with your current standard of living, then home prices technically are not rising. So if home prices are not rising, real numbers compared to inflation, remember I told you to keep track of that 5% number. Home prices are going up 5%, but inflation is going up 8%, then home prices are not really rising. They're actually dropping in terms of the real home price compared to inflation. So if real home prices are not actually rising, home sales are down, according to their information, by over 35%. And on top of that, sellers can't sell. What do you think is going to happen next? Well, my position is that at some point, sellers are going to start putting these homes on the market, and with housing affordability being at near an all-time low or at an all-time low, these homes are going to sit. So it's my position that when real estate does change up or crash or whatever it's going to do, it's not going to be because of foreclosure activity. That's how they're selling to you that it's not going to happen, because they're saying the foreclosure activity isn't there. My position is that home prices are going to crash, mainly because homes aren't selling, and now you're going to start see sellers chasing the ball down the hill, cutting these prices until they find an actual point where people will come and buy these homes. And because of interest rates and inflation, they're going to find out that many sellers are going to have to drop their price by hundreds of thousands of dollars just to be able to meet the demand where people can actually afford those homes. So in conclusion, what you decide to do with your home purchase aspirations is up to you. But if you're like most Americans, there's no way you can comfortably afford the home you want, and you know this crash isn't coming agenda just doesn't feel right. But of course, let me know what you think. Of course, don't forget to subscribe, like, and comment below whether you think I'm just another YouTuber looking for views while pushing a narrative, or if you agree. Thanks for watching. This is a trusted realtor, deal closed.